Have you ever gotten that email from your insurance carrier asking for your SPCC plan and thought, wait, isn't that an environmental thing? Have you wondered why your insurance suddenly cares about oil tanks or how much diesel you're storing on site? Well, today we're breaking down why insurance companies can ask for SPCC plans, what they're really looking for, and what you should do if that request lands in your inbox. And by the end of this, you'll understand whether it's just a paperwork exercise or a sign you need to take a closer look at your site. Hey there, I'm Chris Rulin from RMA, your environmental experts. We help facilities figure out environmental compliance requirements like SPCC plans every single day. And before we go too far, just know that if you ever need a hand sorting out whether you need an SPCC plan or if yours is actually insurance ready, you can reach out to RMA. We'll give you a straightforward answer. All right, let's dive in. First, quick refresher. SPCC stands for Spill Prevention Control and Countermeasure. It's a nationwide requirement for certain facilities that store oil and could reasonably discharge to navigable waters or adjoining shorelines. In plain English, if you store enough oil on site and a spill could reach waters through a storm drain, ditch, or directly into a water body itself, you are required to have a written SPCC plan. That document answers a few basic critical questions. What oil do you have and where is it? How are you preventing spills? What happens if something leaks? And who's responsible for inspections, training, and keeping the whole thing current? And if something goes wrong, how will you respond? Now, here's where insurance comes in. To an insurer, an SPCC plan isn't just a regulatory document, it's a control document. It shows that you've thought about things like secondary containment, inspection schedules, integrity testing, loading and unloading procedures, and spill response. In underwriting terms, that's huge. It tells them you're not just winging it. In a way, an SPCC plan is almost like an insurance policy against spills and environmental risk. It helps you prevent problems in the first place, and if something does happen, it helps you navigate that situation properly. And because it's required by regulation, having a plan and actually following it can make a huge difference if there is an incident. Whether it's an accident or even vandalism, you're in a much better position when regulators come knocking, specifically when it comes to monetary penalties being levied against you and your organization. Because here's the truth, cleanup costs are brutal. Even a small spill can mean emergency response crews, vacuum trucks, contaminated soil disposal, storm drain clean out, reporting requirements, and maybe even third-party claims. Insurance carriers know this, so when they ask for your SPCC plan, they're trying to reduce the odds of paying for a preventable mess. They're trying to assess the level of risk. Another big reason? An SPCC plan is a clear signal of compliance maturity. Underwriters don't have time to become experts in your operation, but if you can produce a current site-specific SPCC plan along with your inspection logs and training records, it tells them someone has evaluated your oil storage and documented proper procedures. It shows you're paying attention and doing your job. In a weird way, it's a lot like having a warranty on a vehicle. If you can't produce records showing regular oil changes, that warranty probably isn't going to cover your engine when it seizes up. The same idea applies here. And sometimes, the sneaky truth is, your insurer is asking because they suspect you're regulated. We've seen plenty of facilities add up their oil storage for the first time only after an insurance request. Between ASTs, USTs, generators, transformers, hydraulic equipment, totes, drums, you name it, the numbers can add up fast. And when that happens, the insurer just wants to know one thing: are you following the law? Think about it like car insurance. If you're speeding, you're at fault and you can cause an accident. Your insurance company isn't going to be very sympathetic. It's your fault and it's your problem. If you have oil storage that requires an SPCC plan, you don't have one, and then you have a spill, don't expect your insurance to swoop in and save the day. So what should you do if your insurer asks for an SPCC plan? First, don't panic, and don't send a half-finished template. Don't send something unrelated, don't lie, and definitely don't fight back. Second, clarify what they're actually asking for. Sometimes they mean an SPCC plan, sometimes they mean something else entirely and are simply asking for it incorrectly. Third, use this as a forcing function. If you need a plan or if your existing plan needs to be updated, this is the moment to fix it the right way. That might mean preparing the plan yourself, hiring an expert to do it for you, or confirming that you don't actually need one. In some cases, an expert will review your facility and determine you don't meet the regulatory threshold. And sometimes, that confirmation alone is exactly what the insurance company was looking for. At the end of the day, an SPCC plan can be the difference between a manageable spill and a career-defining disaster. It shows you have engineered controls, operational procedures, accountability, and a clear response plan if something goes wrong. If you're not sure whether you need an SPCC plan, whether yours is up to date, or whether it would pass the insurance test, reach out to us here at RMA. We'll help you sort it out and make sure you're protected both from regulators and from the surprise of your insurance carrier.